A good morning, good afternoon, good evening to everyone, depending on which part of the world you're joining us from. Welcome to today's session that's hosted by Massicor on the role of cryptocurrency in Africa. And this session focuses on bringing, on the role of cryptocurrency in bringing down cross-border payments costs for digital workers. And it's quite an exciting session that's building off some work that Massicor, in partnership with Massicor Ventures and some of our other partners, has been doing over the last year. And in today's session, we're hoping to share some of those learnings, as well as interact with some experts from the industry that I will be introducing in not too long. To really delve into this topic, understand the subject of payments around microwork and digital work more broadly. And yeah, thank you so much to everyone for joining us, and we really hope that you'll find this session super valuable. And so I think we'll dive right in by sort of taking some time to reflect on, very quick findings from the pilot that we ran in Kenya. In terms of how the session flows, just to quickly brief you. So we'll look at, the findings in a very brief way. And then we'll have Justin Norman, who's the founder and CEO of the Flip podcast. Some of you might have actually interacted with it in the past, to really share some reflections on the subject. We'll then invite our panel for the day to go deeper into this subject and share their perspectives from the different hats that they wear, with a deep focus on the landscape and really the opportunity here. We'll then open it up to the audience for questions and reflections. And at that stage, also inviting the panelists to respond to these questions. And then at the 1.5 hour mark, we anticipate to close the session. So we hope that you'll be as engaged during this session. We highly encourage you to participate, especially when we open it up for questions and reflections. Please feel free to type away your questions in the chat box as the session continues. So that by the time we come into the Q&A, then you're in a position to, or rather we're in a position to see your questions, but we also allow folks, to ask directly through their microphone. So do anticipate that point when we get to that point of the session. But otherwise, we are really excited to have all of you on the session today, and really hoping for a very productive and valuable session for everyone. So I'll just kick us off very quickly by walking us through, some of the findings in a very brief way. Just to also mention that we have a full report on this. So I know this could potentially leave you with, some questions in your minds. And what I'd encourage you is, this is more of a teaser to sort of, give us an idea of, of what we drew from this, but you can interact with the report in more depth, which I will share further down the road. Now, about the report, yeah. So when we talk about cross-border stablecoin micropayments for digital workers, what we looked at here was a fusion of digital microwork on one side, and the issue around payments, and financial inclusion on the other. So it's really a nexus of these two worlds. And when we talk about digital microwork, what we're talking about really is a really new and novel model of income generation that takes advantage of the supply pipeline of work at a global level, and really breaking it down into very micro tasks, or very small tasks, and broadcasting this to a vast majority of potential workers across the world. And there's really, when you look at the ubiquity of, mobile phone usage amongst, young unemployed youth in parts of Africa, it's really trying to see how do we leverage that and, tap into the power of the internet and smartphone and device ownership. But then as these workers get their work, we also see a big friction around how they're able to get their income back to their countries. And part of this involves, very huge costs that can, in some cases, be very punitive, but also a lot of friction along the way. So, either having to, layer on multiple applications or, multiple conduits to get their money. And in the process, it becomes a very lengthy process. And so part of this pilot really tried to look at how could we streamline this and make it more efficient. And we partnered with a couple of organizations. We partnered with Appen, which is a big data analysis and data processing firm based out of Australia and the US. We had a suite of apps, Toka, Valora, and Kotani, which provided the payment rails along which these young people could actually do the work, get paid, and convert these earnings to M-Pesa through, enabled by a stable coin. And so through this process, we were really able to sort of build that pipeline of a young person sitting in Kibera, in Kariobangi, in Kibera or Mathare, or some of these low-income areas in Nairobi, being able to do work of their phones and getting to a point where they could withdraw their money off M-Pesa. Now, the objective of this of our work was really to try and understand, one, how could we reduce the cost and friction, as I mentioned. And here we saw a very dramatic, outcome where, some of the fees went down by as low as 90, the cost of, transaction fees was reduced by as high as 93%. We were also able to demonstrate that MicroWork could, in connection to stablecoins, could really unlock, new digital employment opportunities, as well as incentivize, positive financial behavior. Now, sorry, my slide just jumped one slide. So why is this huge, and why was this exciting for us? I think the main thing that really excited us, amongst other things that you'll find in the report, was just this opportunity around reducing the costs of remittance by as we said, by 93%, right? In the sense that initially, while it cost about so initially while it cost about so by 93%, and so if we look at the opportunity that this presents even for the Kenyan GDP, what we see here is even at a remittance level beyond just micro workers, there's a really big opportunity here as far as like the remittance flows that we see in Kenya moving, right? In the sense that if you look at it from a global weighted average remittance cost, this is going to as high as 4.7%. And what we're saying is that this potentially means that Kenya is losing out on as high as $80 million per year. And we see that if we looked at this more broadly, cryptocurrency could have the opportunity to reduce the remittance cost by as high as 57%, more broadly within Kenya and within the remittance flows that we see. And what this means is that we could potentially create as much as 216 million in value for poor households that are majorly receiving this kind of remittances, and overall this translates to growth in GDP of course for Kenya. Now based off that that context, we are then hoping that today's discussion will dive a bit deeper into this opportunity, particularly looking at the lens of microwork and and stable coins. And really some of the questions that we are asking ourselves here is, how can we enable this opportunity within microwork and cryptocurrency to scale and be used at scale, both by platforms in Kenya and globally, but as well by the different micro workers and digital workers that we see in Kenya. And then the other question is, will Kenya take the lead in crypto regulation? We know this has been a bit of a question over the last couple of years, or will it throttle opportunities for financial inclusion while its neighbors and its peers across the world continue to thrive? So this sets the discussion for today's, the stage for today's discussion. And again, as I mentioned, what I've provided is just very brief snippets of the report. But if you'd like to download the report, we have the shortened link there, as well as the QR code. So feel free to scan this, and this should take you directly to the report website. And so at this point, I'd like to invite Justin Norman for some reflections. Justin Norman is the founder and the CEO of the Flip podcast, a very interesting and exciting podcast that produces, quite some premium material on the state of technology and innovation in Africa. And so, given his lens, or rather where he sits and his view of what's happening on the continent, we'd really begin to hear what Justin, has to say about this. So Justin, I'll hand it over to you to take it away at this point.
Yeah, thank you so much. And so just by way of introduction, I am this American guy who's lived in South Africa for 5 years, and this podcast has been a mechanism for me to learn and has also turned into an early stage venture fund. And that sort of dovetails to why I'm speaking to you today, because in particular, I'm really obsessed with this future of work question. We all see these pitch decks from startups around Africa's population growth, and that being an incredibly good thing for the nature of market sizes and investment opportunities in the future. But I really wonder if it's actually a bad thing in the context of how fast the population is growing, and the commensurately small amount of jobs that are being created or earning opportunities that are being created. And so my relationship with Mercy Course has started just around this question of where are the jobs going to come from, and what are the earning opportunities going to look like. And I certainly, in my personal opinion, believe that crypto and Web3 will play some sort of role. I'm not going to be here today to tell you that it's the end all be all, or is going to change the nature of work like some on Twitter might have you believe. But I certainly have a realistic yet optimistic perspective on the role that Web3 could play. And certainly, this case study that you're going to hear today around micro work and around cross-border payments is one element of that, but I really think that is just the beginning. And so to understand, the broader opportunity that exists in the context of Web3 and the future of work, I think we first need to just talk a little bit about the nature of blockchains. Immutable, decentralized. Decentralized means that they're permissionless and that anyone can participate regardless of geography. And that is something that first and foremost, I think, is just a completely different paradigm compared to its Web2 analog, where you might sign up and register for a fintech app and it tells you, sorry, this app isn't available in your location. For the first time really with Web3, it's creating the promise or the opportunity of a new means of coordinating economic opportunity or economic activity in the digital economy. And that's something that truly the digital economy in the sort of fiat analog context isn't something that all or many consumers or workers in emerging markets and certainly in African markets have been able to participate in. And then the nature of blockchains as well, being open and decentralized, means that what we're seeing is the rise of these digital applications that give you ownership of your data. So whereas Facebook or Twitter, you have to seek permission from them to access your own data, everything is portable and you can take your data with you with a decentralized application and with Web3 from one place to the other. And so that can manifest in a lot of different ways, which we'll get into now from a work perspective in particular. But what it really means is that this data that you own as a worker, for example, or as a consumer, is something that is potentially of value, or at least can be used within Web3 applications to create new paradigms from what exists at present. And I use the term new paradigms because I think it's also important to just look at, when there is a technological shift. We saw it, from the analog world to the digital world, where, the earliest days of the internet was taking something like a newspaper and putting it on the internet, right? Eventually, we discovered this internet native application of, distributing content. It was an algorithmic newsfeed, but to start, it was just taking this analog version and putting it directly on the internet. And we can see that, it takes a lot of time for people to figure that out. I mean, if anyone's been in a restaurant recently and scanned a QR code, we're still having to pinch these PDFs. It's an analog version of, a menu instead of, a mobile first menu for being able to view and order food at a restaurant. But the big question will become, as Web3 proliferates and as more people build, what are the sort of Web3 native applications? Today we're seeing a lot of just taking the old version of the thing and adding a token to it, or taking digital micro work and doing crypto payments. But the future is going to look like something completely new, a new paradigm. I'm not going to purport to know what it is, but what is important that Mercy Corps is doing, for example, is experimenting, and so many others are experimenting to lean into this technological shift and to figure out what the opportunities might be. And so an investment firm like A16Z will tell you that the future of work is DAOs and crypto networks. And what that effectively means, and DAOs are decentralized autonomous organizations, although they're not really decentralized at present and they're not really autonomous at present, but the whole premise is utilizing Web3 technology as a new mechanism of coordination. As transaction costs decrease in the case of payments, it really brings to light this question of the nature of a firm, right? And what role do firms, and what role do hiring marketplaces, and what role do other sort of quote unquote middlemen play in facilitating transactions and facilitating the coordination of economic activity in the digital economy? And I'm not going to say that there's going to be no role for these aggregators or these people, but as transaction costs decrease, again, what does it mean in terms of the value of work or of economic activity accruing to the workers themselves? And so back to this question, just again about permissionless decentralization, ownership of data. In the future, I can take my work history, which is on chain, connected to my crypto wallet. I can plug it into other protocols to work. Employers can see my work. It's verified on the blockchain. I can get paid in tokens. I can get paid in stable coins. The on and off ramps are more clear. So if I want to, again, in the case of Celo and in the case of the Mercy Corps pilot, if I get paid in a stable coin and I want to transfer it off into M-Pesa, it'll be more clear. Those on and off ramps are being built. But the whole premise is, again, new models of economic activity and new paradigms and new work opportunities will be created. And so as the coordination costs reduce, as cross-border payments problems get fixed, as transaction costs decrease, and in this truly digital permissionless economy where everyone can participate, the big question that I have and that I'm leaning into and that I'm writing a lot about is, what does that mean for Africans in particular? This Mercy Corps pilot, as I said, is one initial experiment that I think is fantastic. But, to the extent that we all collectively on this call believe that, Web3 can create new paradigms and can create new work opportunities that are beyond even what we're thinking about at present. Again, in this big question of the future of work amidst a backdrop of tremendous population growth, I certainly am of a strong opinion that, more experiments need to happen. And so that is why I'm very excited to have just given a little bit of an intro in advance of this panel discussion today about, the future of work and the way and the role in which that crypto can reduce the cost of micro work. And I certainly look forward to participating in a lot more of that and seeing a lot more experiments. So with that, thank you very much, and I'll hand it over to the panel.
Thank you so much, Justin. quite some, deep reflections there and quite some exciting perspectives there. Especially when we think about what this means in terms of geography, really democratizing that access to micro work. I think you highlighted that. And I think that's quite a big thing from some of our previous reports and research, the issue around, like Africa as a region being locked out from opportunities, or digital workers in Africa being locked out from online work opportunities has really come up, quite strongly. And so, hearing about the opportunity that, opportunities like blockchain and crypto have to really democratize that space, and, payments as well is quite interesting and exciting. I think I also had, the bit around, making it open and centralized, especially when we think about, decentralized autonomous organizations, the DAOs, and, sort of the role that they will play in the coordination and the distribution of work. And I think it's really about breaking that down, that long chain of multiple middlemen that we have previously seen within the ecosystem. And the last point that really struck me is the bit around data portability, because this is something that has come up, quite often when we speak about, micro work and digital work more broadly. And even as we think about it from a payments and financial access point of view, that ability to switch between platforms and be able to carry your data with you as a micro worker is really fundamental. And, if you think about payments, for instance, they form a very crucial basis of, one's profile and one's, credit history. And so even as we look at, the opportunities that cryptocurrency and blockchain more broadly present from a payments point of view, is really also allowing us to carry that historical data of micro workers, and being able to be something that they own and control, rather than this being solely controlled by the platform. So I think those were very solid reflections. And thank you for setting the stage up for us. And I think at this point, it's a good way to segue into our panel. And we have quite an exciting panel joining us. I'll quickly introduce the panel as we delve into the questions for today. We have Dr. Ehud Gashogo, who's joining us from Nairobi. Dr. Ehud is the director for the Jira Digital Project, which is an initiative of the Kenya Private Sector Alliance, the Ministry for ICT, with support from the MasterCard Foundation. Now at Jira, Dr. Ehud leads, very robust work from, the government and the private sector in terms of, creating opportunities for young Kenyans to delve into the world of digital work. We also joined by Shakila Kere. Shakila is a digital economy specialist at FSD Africa. She has experience in leveraging digital tech to solve development challenges with a particular focus on women and youth. And her work has really tried to look at, the opportunities for MSMEs, for digital platforms and, digital workers. And she's joining us from Nairobi as well. We also have Frida Mwangi, who's the founder and CEO of Kazi Remote Limited. Frida, runs this agency that provides talent as a service. It's a social enterprise. And Frida is a seasoned digital worker, having started out as an online worker to the point of, building out her social enterprise that, really pulls together young workers in Nairobi and avails this platform through which they can provide services like transcribing, transcription, captioning, and the like, a whole suite of services under the digital work banner. And finally, we have Angela Kalau, who is a partner for research and innovation at Cello Foundation. Angela was, part of this pilot on the C Labs and the Cello Foundation side. And he has quite some experience in fintech and the world of crypto, particularly in trying to understand how these technologies could be used to address some of the development challenges. And your host for the day, I'm Gitu Kungene. I'm the Senior Advisor for Youth Employment and Innovation for Masico in Africa, and was part of this pilot as well. So so this is given we have such a an experienced team joining us for the panel. We are really excited to get some of the perspectives and reflections of these players within the industry. And I'll start us off with a question directed at Dr. Gashogo. Now, you run, Dr. Gashogo, you run, the Jira initiative in Kenya, and it's quite a robust initiative, one of its kind within the continent, that brings together government and private sector. And I believe a lot of what we've discussed or what we've heard from, the findings, and also, just in terms of what Justin was reflecting, I believe is something that you've actually seen and experienced in your work. And so we'd be keen to hear, based on the work that you've been doing, how some of these technologies like cryptocurrency, blockchain, are manifesting themselves amongst Kenyan workers and amongst the work that you're doing, particularly in relation to digital work and the payment mechanisms that entail. So yeah, share with us, just part of your experience and what you've been seeing in the Kenyan ecosystem of digital online work.
Thank you very much, Gituko, and good morning, everyone. And we're very excited to be part of this very important conversation this morning that seeks to really provide insights on how we can be more effective in supporting the online workers who are seeking opportunities to grow within the digital work platforms, whether locally or international. And one of the things that we really want to really appreciate is that this is a very timely discussion, given the fact that digital work is really growing and is one of the core focal areas that we know that economies in Africa and in particular can really be able to create jobs for young people and really set our future where our economies and our continent really can really grow tremendously. Allow me, before I delve into that, really to speak a little bit about what we do. And just like it has been introduced, the Ajira Digital Program is a Government of Kenya initiative under the Ministry of ICT, Innovation and Youth Affairs. Our goal is very clear, is that we need to position Kenya as a freelancing destination hub for the freelancers globally who works in our country and supports companies, both national and multinational, in their outsourcing endeavors. And this means that for every year, we target that 1 million young people will access dignified and decent wages through digital and digitally enabled work. With that backdrop, we seek to support the growth of our economy by promoting outsourcing, which is one of the key enablers of the Kenya's growth strategy as envisioned in Vision 2030. And that means that the role of the private sector in general, the role of government, and the role of digital workers, and all the ecosystem actors becomes very critical in pursuing this goal. As a program, we have 4 key pillars that we pursue. One is creating awareness of the opportunity. We also promote infrastructure because, as we all know, that infrastructure is very, very critical in spurring growth of digital work in the country and in the region. We also provide training and mentorship that allows us to build the capacity of young people to be able to undertake digital and digital enabled work across the globe. So what some of these reflections do mean to us is that we've really been struggling to look for the most optimal opportunity to reduce the cost of transaction for most of the online workers. Let me size up the opportunity so that we can really appreciate what you're talking about here. Agile Digital Project do always carry out an online work and digital work index every year. From last year, we have seen that 1.2 young million, which is equivalent to 5% of Kenyans, are actually digital workers. And on average, they earn roughly $210 every month. Now, majority of these workers are actually working on international work platforms, therefore interfaces significantly with the payment needs. So the reflection this morning just shows how the cost of transaction can significantly reduce the impact of remittances from international work to growing our local economy, but more importantly, reduce the amount of money that digital workers are really earning in the country. So in essence, as we seek to unlock the opportunities for digital workers, the way the payments are done, how they are done, the modalities of that is very, very critical. Let me put it this way, that in what we've seen really, the payment remittance costs almost eats up the opportunity for young people. And we've seen payment rates that ranges from 30%, and these really are also very limiting because they either use one channel. A lot of these are also done through bank transfers, taking a lot of time. So ideally, the cost of delay is not even factored as part and parcel of some of these spillouts that we do experience, and really puts a lot of pressure to online workers. So as a program, we have been pursuing opportunities where we are able to provide seamless opportunities for young people. And we do believe that the findings of this survey and this research that Mercy Corps have done really speaks to one of the most pertinent needs of our Kenyan digital workers today. We have also, as we speak that, I also want to really put the context, the real need of the local payment platforms at the digital wallets, which we have seen continue growing. And we also think that that ecosystem really would help us to really fast track us getting into that level.
Great, thank you so much, Dr. Ehud. Now, I think it's quite interesting to hear, from your analysis. We're looking at this as being about 1.2 million Kenyans, and that aspect of around $200 monthly. And I think a lot of this has been catalyzed by COVID. Sort of seeing a lot of transition into digital work. And what I'm hearing is, there's quite a friction there when you look at, the modalities that these workers are using around, bank transfers, PayPal, in some cases, like Visa and MasterCard, and even, Western Union and MoneyGram as platforms. And I think there's that friction, there's the spillouts, there's the delays. And I think you sort of called out that from your analysis and your research, some of this is costing some of the workers up to 30%. And I think it's really valuable to look at it from that macro level. But I'd like to take us a bit deeper and closer to the workers themselves. And I think for this, I'd just like to invite Frida. Now, Frida, I know you've been a seasoned digital worker yourself. Through your social enterprise, Kazi Remote, you've been in the industry, trying to, connect, hundreds of young workers to this kind of opportunities. Now, I mean, based on your experience, what has this meant for you, right? And how has been your, as an online worker? Could you just paint the picture for us of what it entails to not just to work on the platform, but really, get your income and ensure that at the end of the day, you have, the money in your bank or in your M-Pesa account. What has that journey been like for you from the time you started, and what are some of the evolutions that you've seen over the years?
Thank you so much, Ben, for the opportunity. And this is really an exciting discussion. And I think I want to say that as I read the report on the role of cryptocurrency and the pilot program that you did, it was exciting for me to see the evolution and to see how closer we are getting. So my name is Frida Mwangi, and I'm the founder of Kazi Remote, and it's a social enterprise, a women-led enterprise that offers talent as a service. I started out as a transcriber in 2015. And of course, the issue of payment has evolved. And I believe we are also going to get as we continue to do these experiments, understand Web 3.0, see the opportunities in cryptocurrency, it's going to get easier for the online workers. So when I began in 2015, actually, Ben, I would say that there was PayPal, but before that, there was PayPal that was not allowing Kenyans or the African workers to use it. And so at that particular time, you would go to some of these platforms and try to apply for jobs. But then when you're asked to give your payment details and you don't have a PayPal, the first thing the client thinks is that you're a fraud, because they couldn't understand why you wouldn't have a PayPal. It was the most commonly known method. Then the PayPal came in and brought in a bid for the African region and Kenyan. We could open the PayPal account. But then there was of course, what is it called? The foreign exchange rates, the platform commission. And so what happened is that you would, so for example, I started out in the Upwork platform. It was then known as Elance and Odesk, but then they joined together and became Upwork. So what happened with Upwork is after you got paid to PayPal, you had to wait for 5 days or 6 days. I remember it was 6 days, so that the money gets to PayPal. But then when it gets to PayPal, then the only bank that was able to transfer the money was Equity Bank. And depending on the amount of money that you're withdrawing, it could take another 3 days. So in essence, it was taking around 10 days to get your money in your account. The other thing is that if you're working at Upwork and you are doing an hourly work, it took you 7 days. You had to finish a week so that Upwork could, manually or automatically count the hours and the amount that was owed to you. And so you would be paid every Wednesday depend. But if you're starting out with a client, it would take a whole 2 weeks to get your first payment. And then from there, it was a weekly payment. So that moved from PayPal to Equity. And then of course, when M-Pesa happened, it was also a new innovation. And Upwork actually took in M-Pesa as a mode of payment. So you didn't have to go to PayPal. You did not have to go to Equity. You could transfer your money from Upwork to M-Pesa directly on your mobile phone, but also dependent on the amount of money that you're withdrawing. The higher amount of money that you withdraw, the more days you have to wait to get it into your either mobile phone or the bank itself. Then there's also this other payment option that we used to use that is called Payoneer. And Payoneer had to send you like a Visa card, for you to be able to be withdrawing money. Now, the challenge there was Payoneer did not understand our addressing option, the PO box. So once you want to fill out that and you write PO box, they would not understand. It was a problem. I would say it was a very big challenge, but as the days have gone by, now they are, if you have a PO box, they're able to send it to your address and you can collect the card. But then in terms of when I stopped, when I started the company in 2017, of course, you've grown, you want to have your own website, you want to have payment integration on your website, make it easier for clients to be able to be checking out and, getting paid. The best option was Stripe, and it still is the best option if you have a website, but Stripe is not available locally in Kenya. So what happened, I tried all ways of getting to Stripe, to have a Stripe account. And it took me to a point where I had to call the IRS in US and explain to them that I have a company here, and I'm not living in the US. If there's a way they could give me a number they call EAIN, so that I will be able to open a Stripe account. So they do give out that number, but then you have to have a physical address or rather a virtual address in the US, or you have to have a phone number in the US to be able to get that. And then if you really want, now that's personal, if you want to get the company in there, you have to have a company, the one they call Delaware's companies in the US registered. That way it's very easy for you to get a Stripe account. If not, then you cannot work with Stripe, you cannot integrate that payment. PayPal has been really troublesome in terms of the way they wake up and just decide you're not going to get paid. They have limits. They ask you to verify yourself. They ask you to send in your ID, some of your utility bills. But then if you get an amount that is higher, or rather they've not seen that kind of money getting into your account, they just block they suspend your account without giving you any information, and you have to follow up. And sometimes it takes up to 180 days to get your money back, and sometimes you actually just lose it. So in terms of online work, PayPal has really been very inconveniencing. I actually saw a joke on social media the other day where a lady was saying that she can see young men in Roysambu area going to eat at a kibanda, and yet they're driving big cars. And someone responded and said, those ones are people whose PayPal accounts have been suspended. That's why they don't have money right now. So yeah, that has been, it's been a challenge. And in terms of integration for myself, it got to the point where I would use Zoho invoices, because then when you have a Zoho invoice and you have a PayPal account and the client is verified, then they do not suspend your money. But for a client to come to your website and check out easily and seamlessly, I believe we still have a big problem around that in terms of website payment integrations. So when I read the report and I saw how easily it was for people to get their money, like immediately I've done my work, there's an option for saving. And Gituko, I loved the idea about saving, because online workers honestly do not have a saving culture. And it's because maybe most of us were not brought up with financial literacy education. It's not something that is offered, it was offered in schools then. It's maybe people have not done personal initiatives to understand financial literacy. So the problem I have identified, even with the young people that I work with, is that the saving culture is something that needs to be taught. It's something that people need to understand. And so if we have a payment option that gives you that option of saving and allows you, you get rewarded. I saw there's a place they were getting tokens because they are saving. I think that for me is a plus, and cryptocurrency easily enables that. The other thing I think, or I believe, would make it very easy for this integration is because in terms of policy and regulation, the one thing that you identified was the central bank wants you to identify your customer, right? With cryptocurrency, and especially this Web 3.0 and the new technology around NFTs, I think that would be very easy for us to identify the people who are working online, identify their, have clear identities. You can prove it's them, so you don't have to worry about fraud and all these things, so that it makes it very easier to verify that this is, if the money is being sent to this person is actually working with a client and it's not a black market or anything illegal. So I believe that Masikop, you're on the right path, because most of the reason, or rather I'll give you I think the biggest challenge as to why most freelancers are not able to advance from freelancing to business is really around that. You might find yourself direct clients. It's a bit easier when it's you on a personal note, but when it's an agency and it's a company, payment options become a little bit harder. And so what I've chosen to do for myself as a company is we actually have direct bank transfers from our direct clients. It's not the best option for them because, Western people, or rather people from the Western world, are used to checkouts, one-time checkout. You just click, say this is the services I require, and then there's a payment there, and then the money is immediately deducted from their accounts or their credit cards. For them, you have to offer a really good quality for a client to want to go to an extra mile to go and transfer money from their bank account to your bank account. So I believe once we have a really clear and robust payment integration, and I think cryptocurrency is going to be able to do that, it will be easier for online workers now to start building their businesses. And then I don't know, I wanted to say something. I think that's it.
Yeah, I'll come back to you, Frida. So hold on to that point. But it's really exciting for me to hear this challenge, crystallized, to that extent in terms of, what these pains and frictions look like, right? And also to sort of see that graduation, that gradual progression in innovation and what that has meant for you in terms of how you're able to access, your income as a digital worker, right? And, taking it back to where you started from, like waiting for 2 weeks to get your payments, there being only one bank that could integrate with PayPal. And, even with that, having to wait for, 6 to 10 days for your money to kick into the account. And also hearing that, over the years, you've sort of gotten a broader suite of options, from Payoneer to Stripe. I think you mentioned, the integration of Zoho with PayPal. And I think what this speaks to is the evolution in payment mechanisms. But again, on the flip side, what I still hear, when you were speaking is that despite this, gradual progression, some of the challenges still remain, from, the limits that, platforms like PayPal will still, give you, to the verification processes, to the risk of your account being blocked or suspended, dependent on your income flows. And all this, sort of ties, to also your legitimacy as a gig worker or as a digital worker based in Africa. So it's a very, tight situation to be in. But also a very interesting time for us as ecosystem actors, and particularly the innovators in the room, to try and understand what these pain points are. And I think off that back, we sort of see now, with improved clarity, where the opportunity for cryptocurrency is coming in, because then we see that despite all these innovations over time, there are still gaps that need to be addressed. And I think what the report picked up is that cryptocurrency provides this opportunity, to some degree to plug some of those gaps. And I think we couldn't have a better person to talk about, this bit on cryptocurrency than Angelo. Now, my question to Angelo is, for starters, could you just demystify for us what stablecoins are? Because this has been mentioned quite vastly in the report. But even as you do that, just help us understand, what makes, stablecoins viable for, viable in addressing these cross-border payments that we've had from Frida. Where has, your team at the Celo Foundation seen the opportunity, and how is this evolving in terms of plugging some of those gaps?
Thank you, Gituku, and very pleased to be here. My name is Angelo, and as Gituku mentioned, I work for the Celo Foundation. Maybe as a little introduction before I go on to your question, my role at Celo Foundation is to be a catalyst and to develop use cases such as this microwork use case, because we're of the belief that cryptocurrency and blockchain technology can help us create a monetary and financial system that can unleash conditions of prosperity for everyone. And the reason why we did this project with Mercy Corps is we wanted to kind of like show and build the evidence that there are real world applications for cryptocurrency and blockchain technology just beyond the hype, right? And very much the core of our discussion today is like we see a lot of inefficiencies in the current financial system. We see a lot of opportunities for inclusion. And this is something that blockchain and cryptocurrency can help address. So aside from the very first use case that we developed or like we kind of like showed is using it for the humanitarian context, meaning aid delivery cross borders. We have a lot of donors around the world going to, difficult places or like places where we need aid the most, but then we don't have like the financial infrastructure to do it. And so like just the ability to wire value or to transfer value instantly and at a fraction of a cost really demonstrated the potential of the technology. So maybe the best way to explain what stable coins are is like ultimately it's underpinned by blockchain technology, right? And cryptocurrency is like a representation of value or like currency itself that lives in the blockchain. And the key difference is before, if you look at how money is issued in present time, it's like we have centralized institutions, say central banks or like monetary authorities in respective jurisdictions, who the people trust or like who the community trusts, so that their issuance is considered trustworthy. That's why we call it fiat. But then and this is where it goes philosophical, that trust is like bounded by borders, meaning, let's say in the context of Kenya, Kenyans trust the Kenyan central bank. Therefore, the issuance of the Kenyan central bank is something that you can use for everyday transactions for you to go about in the economy. But then when you cross borders, then that trust becomes a little fluid, or like there will be some, my accountability or like my faith in a certain institution is different when I go beyond where we are right now. And so this is essentially a problem because, as we know, in the globalized world right now, we need a way to kind of like transfer and create value without this dilemma of trust. And what blockchain technology does is distributing ledgers or like creating a network of computers that speak a common code. And that common code, meaning like that's the train of that's like the chain of blocks. That's why it's called blockchain, such that it's recognizable. And then someone like a network of validators would say like, okay, I recognize this code, I recognize this transaction, therefore it's valid. And so in a way, it resolves the current issue right now where we have to rely on centralized institutions to verify or like to resolve the trust issue for us. So that's why also compared to before, let's say because we're going around, we have different time zones. Certain transactions are only permitted in certain time frames, like 8 o'clock to 5 o'clock East Coast time or like East Africa time, for example. But with blockchain, because everyone has access to the distributed ledger, as well as like everyone follows the same code to make sure that all transactions are trustworthy. Therefore, we don't have to rely on like anchor ourselves on a specific time zone. So that's more on the blockchain technology in cryptocurrency, and you see a lot of projects in cryptocurrency right now, different types of cryptocurrencies being issued. But for Celo in particular, because our mission is to really make cryptocurrency useful in everyday life, the way that we did it is to make or like do design decisions that make the blockchain cryptocurrency mobile first, meaning programmers, developers around the world can use the technology specifically for mobile phones, and then issuing stable coins on top of the chain. And by stable coins, essentially what we mean is, let's say for the case of Celo, currently we have 3 types of stable coins issued on the block. CUSD, which is Celo US dollar, C Euro or Celo Euro, and finally just recently C Real or C Brazilian Real. And essentially the difference is that each of these currencies are pegged to the value of the fiat currency. Like let's say for CUSD, it's the US dollar. For C Euro, it's Euro, and also applicable for C Real. And what this brings is stability, because let's say Bitcoin or Ethereum, the more popular examples of cryptocurrencies right now, for observers and for those who are currently in the market, you could see the fluctuation of value. And as it can go like on a bad day as much as like 10-20% on a crash, but it can also go up in the same direction. But then this volatility, of course, will not be helpful for real world context. Let's say digital workers who want to pay their bills or like send their children to school, or use their income for real world transactions. And so through stablecoin technology, by pegging this value, and there's a mechanism by which we're able to do that, and I'm happy to share and elaborate that on a separate conversation. It's like holding these foreign currencies in your digital wallet, and ensuring that you have these value and it's safe and secure, and you can use it in your everyday transactions. So I'll pause there, and that's an overview. But what we see is like as we move forward, stable coins have the ability to basically resolve what Frida was painting vividly, something like realizing more value for digital workers, especially in the continent.
Great, thank you so much, Angelo. And I think, thanks for demystifying that, because I think the minute the word cryptocurrency comes up, and I think a lot of the people on this call will attest to that. Maybe the thing that comes to mind immediately is blockchain and Ethereum. But what we're hearing is, for stable coins like the Celo dollar or Celo Real, or the Celo Euro, it's pegged to a fiat. It's much more stable, and so provides stability and certainty to whoever's transacting with it. And I think that's quite important for micro and digital workers, because essentially they wouldn't want to engage with something that is fluctuating in value, that's super high today and then crashes tomorrow. So I think that's often a misconception that people get, by blanketing cryptocurrency, in one category. But then it's really exciting to hear that when you're thinking about stable coins, it's actually quite different. But also something else that you mentioned is that the bit around trust. When we are moving between borders, that trust in the currency diminishes quite significantly. So I can imagine as a Kenyan, when I'm using the Kenya shilling, I'm almost guaranteed that my 1 shilling today is equivalent to the shilling tomorrow. But the minute I transcend borders, I can't quite guarantee what the dollar or the euro or the Tanzanian or Uganda shilling will mean going forward. And I think that's the reality of digital work payments, as Frida highlighted. And so that element of trust is super critical. And I think even as we talk about that, I'd like to invite Shakila to talk to us about what this means for digital workers and the world of financial inclusion. I mean, being with FSD, I know you've looked at fintech in a very broad way, but more recently you've been doubling down around this category of digital workers. And you focused on the digital economy quite significantly. Now, with the lens of an organization that has dedicated its energy and resources to fintech and financial inclusion, could you just tell us why this is important, or why you deem this important, and why are payments and financial products so critical for digital workers? I mean, we've heard this from Frida, from Dr. Ehud, who are squarely within this industry, but I think also getting that understanding from someone who's been in the payments industry will be super valuable for us as well. So Shakila, on to you.
Thank you so much, Gituku, and good morning, everyone. So let me give you a brief background into just FSD Africa's mandate as far as the digital economy is concerned and digitization. So you rightly put it that, we initially, as when we started, we were heavily focused in the financial sector and in, digitization within the financial sector, working with fintechs, trying to increase access to, just generally financial services and products for really marginalized market segments. And what I mean is people who would typically not have bank accounts. So the youth, women, low income earners. So that was our initial mandate. But over the years, as we've implemented interventions and as the world has evolved, so we've sort of segued and to move more broadly into the economy, because what we quickly realized is you can't solve financial inclusion challenges in isolation. For them to make sense, for us to solve the poverty issue, we need to make sure that those solutions are interlinked to economic activities and interlinked to increasing people's productivity and earning potential. And that's where the whole essence of the digital economy came into being. So we started looking at technology, not only with respect to the financial sector, but technology as a means of solving constraints within certain economic value chains. So for today, for example, you're talking about, micro, like digital, I'll say gig, because we look at it as gig workers or gig platforms. And I'll just explain to it more broadly, because it also encompasses the micro work. But when we look at gig platforms generally, we also encompass, the informal workers, the informal sector. So leveraging technology, not only to sort of provide work opportunities or income earning opportunities for sort of formalized work opportunities, not necessarily, we also include, entrepreneurship. So it could be including your plumbers in there, because they're largely informal and they don't have an access to a market. So if you have a platform that then you can formalize that. So our ultimate aim is, formalizing the informal to increase the earning potential and also the income opportunities just for the informal market segment. So that's how we look at gig platforms in general. And the conversation today is focused on micro work, which is also a subset of that. And in terms of why financial, access to finance and access to payments is important, I think Frida's journey was a very good testament of just the challenges that people face and why it is important. Because you participate in work only and online and digitally because of various reasons, but then you're not able to get back your money. So that's a disincentive, and not to mention that it's also impacting on people's earning potential and their take home ultimately. Yeah. So for us, it just shows how important payments are. The instance that the access to payments is quite critical. So that's even if you're trading, if you offer a service, if you work for somebody, it's very important that then on the flip side, you're able to access your compensation. So that's why then we look at it as an embedded finance option, meaning you have the platform that's enabling you as a person, to participate in work, and it doesn't necessarily need to be within your borders. Because I think micro work the digitization opens that world that you in Kenya, you can work for somebody in the UK, US, and France. So there's that element which is great, but also how does the money flow back to you? And there's the issue of currency. In what currency are people comfortable paying you in? And I think Frida, and that's where the issue of the channel becomes important, and the currency that you're using, because I think that's what you say, like in the States, they're more comfortable with Stripe there. So they know how to pay us by Stripe because they don't have M-Pesa, we have M-Pesa. So there's that also, the use of different technologies across borders, So it's important, I think this conversation becomes quite critical because it's solving different challenges. So internally within borders, it's also solving that access to payments issues. So at least luckily for Kenyans, we have M-Pesa, but that's assuming, it can only work if you're working with a Kenyan. If you're working with a Ugandan or Tanzanian or Ghanaian, even within Africa, what does that mean for you? So yes, you'll have access to work opportunities, but you don't have access to payments. It becomes a challenge. Or it could work, but it's very, very expensive. So then again, it's a disincentive to maintaining people within that platform and just incentivize people to keep, with the online work trajectory. So I think the whole essence of digital currency. So digital currencies have come about to solve a market need. So the market is just, innovators are just responding to challenges within the market. And I think later on, we'll just talk about why central banks are increasingly now, trying, because initially, at least in Africa, the central banks were not so moved with the whole digital currency situation, but now they can't afford to. They have to be part of the conversation. And I think also Frida spoke about policy and regulation. They have to definitely come to play because it's a big issue, because digital currencies actually providing a solution to a very big challenge in the market. And given that it's touching on money, it's touching on who issues it, and in parallel, if it's not linked to the fiat, there's the issue of then their own role as a monetary policy regulator. So they have to come into play, which is why then the talk about central bank digital currencies is coming into being, to just see how to harmonize and to just manage the whole situation. And then to increase access to payments, to increase financial inclusion so that you include everyone. So if the whole essence of hard currency is not working, of course, when you're talking about digital transaction, cash doesn't make sense. Yep. But does it mean then that, what channel are we using that's acceptable to everyone? So that becomes very critical. That payment angle becomes very critical, and digital currency is just one way of it. And as Justin says, it may not be the only option. It could evolve over time. And I think as the issue about CBDCs come, the central bank digital currencies come into being. So it's how do those two currencies exist? So how do CBDCs exist in a world with digital currencies? Does it mean that then CBDCs become universally acceptable, then digital currency fall off, or they coexist? So it's different mechanisms. And I think the approach also that central banks are taking, and which Central Bank of Kenya did as well, rather than be very prescriptive, it's trying to understand the market, trying to understand what's happening, and trying to understand what would be the most suitable operating model to make sense for the market, because different jurisdictions have different ways of looking at CBDCs, and those are very contextual based on their market setting.
Yeah, that's quite exciting, and I'm actually glad you touched on the bit around CBDCs, because I think, and I want to frame it closer to, the regulatory aspect, which I know FSD has worked in, quite significantly. And so I would, I know you have, some significant understanding of, the role of governments and, policy organizations. But, what we are seeing, especially across most African countries, is, a broad spectrum in terms of how regulatory and government organizations are treating cryptocurrency, from very conservative stance where it's almost banned, to more liberal approaches where governments are saying we can explore CBDCs. And so, I mean, from FSD's point, what needs to be done to guide, that prudent adoption of these crypto assets, with the workers in mind, right? With the end users in mind, whether it's digital workers, whether it's, humanitarian use cases like Angelo mentioned. How do you see that spectrum of regulation playing out?
Okay, thank you for that. And I think when governments are looking at CBDC, so like all things, like all policies, the key question is, what is a policy objective? And I think when you look at the note that the central bank circulated, they also have that, why CBDCs? What are we trying to solve for? And at the end of the day, is, how will it impact on the ultimate users of the currency? And there are various, I think there are various, is it objectives or policy objectives that governments look at when they're looking at CBDCs. So like the government of Nigeria has issued, it's the first government, I think, to issue a CBDC, the eNaira. Of course, we don't yet know how it's functioning because it's just very early days. But for them, I think the genesis was, there was a lot of cryptocurrency, a lot of digital currencies in Nigeria and linked to remittances. So the government, the CBN, then wanted to just make sure it had a good hold of, the foreign exchange in the country. So that primarily for them, I think, was their main objective, linked to other things, but the cryptocurrencies were very prevalent and they didn't have a hold of it. But in Kenya, for example, I think our central bank has been quite vocal about it. So they would like to issue CBDCs with a payments angle. So to increase efficiency within payments, because we already have M-Pesa, but it's expensive. It may not work for everyone, especially merchants. So they've actually lumped it, they've categorized it quite well. So there's the issue of retail payments, because we know there's interoperability from person to person. So you can send to somebody across a different network, but from the merchant angle, that doesn't work. So they're looking at if the CBDC would then, solve the issue of interoperability across, business payments. And then again, for the issue, they have the cross-border payments, which is very critical for us. And especially as we are talking now about the African Continental Free Trade Agreement, how then do you make payments across border seamless? And it's very relevant also to the conversation today, not only to traders, So because now it's a very laborious process, it's expensive, it's either you have a bank account, but again, it's very expensive. And if you're using these other alternative tax solutions, as Frida mentioned, it's not necessarily easy, it's not necessarily accessible to everyone. So if then the governments can have different CBDC, amongst themselves, and then at the really macro level, then they centralize the clearance and settlement process, so that then ultimately the users benefits, it would be optimum. So there are different considerations across that. And then there's also the issue of that's a policy objective, and there's the issue of the operating model. So as CBDCs are structured now, there are sort of three operating models that central banks can issue, digital currency. So the first one is a unilateral CBDC, where they do everything. They issue the currency and they interact with the end users. But of course, there are pros and cons to that. And that's something they need to consider, because they don't want to be seen as market actors. And then the second one, which I think is more common, is the intermediated approach, which most central banks are opting for, is that they issue that. Then they have intermediaries, which could be your mobile money operators, your payment service providers, the banks even, to interact with the users. So it's almost like a similar issue that we have with cash nowadays. Central bank issues a currency, then you have financial institutions who they regulate. They deal with money with different functions, but they maintain overall oversight. And the last one, which again is a possibility depending on the level of development of the market, in markets where there are many private sector actors who issue their own digital currency. So the central bank doesn't necessarily issue its digital currency. So they let those currencies to thrive as they were. But what they do is that then they make sure that they've issued their currencies are backed by central bank's assets. Yeah, so that they hold liabilities within the central bank. So it's contextual, as I mentioned earlier. So they need to think about their policy objectives. Then they need to think about the state of development of the market and the signaling. So of course, all of these things, ultimately, it's the end user benefit. So if you want to, for example, increase financial inclusion, so maybe the intermediation aspect would work best, so that they issue the digital currency, but allow everyone else, payment service providers in the markets, mobile money operators, to also, issue and interact with users within the market. And then there's also, of course, the issue of efficiency of payments, and this becomes critical. So if they have the platform in which they issue the currency, so they can reduce costs by not charging intermediaries, for example, to use the platform. That way, making sure that ultimately the end users also don't have a cost transferred to them, then reducing cost element. And of course, there's interoperability, because everyone is plugged onto the system. So the policy objective and the operation model considerations are very critical. And of course, not advocacy, just lobbying and discussing with market actors is very critical, as the case that the CBK has done with Kenya, that they just don't go about and issue a currency, which I think is what CBN did. They decided they're issuing the Naira without necessarily getting interest from the market, but central bank has used a different approach. They've given us their thought process and have solicited for thoughts and processes from the market to make sure that if they decide to go that route, that it's something that holistic and serves the market players.
Okay, great. Thank you so much, Shakila. And in the interest of time, I want to open it up for questions from the audience. Now, feel free to unmute yourself and ask your question. And if you're not comfortable, you can type it into the chat box, and I'll read it and ask it to the panelists. And also, as you ask your questions, if there's, if you'd like to particularly direct it towards any of the panelists, then do indicate that. Otherwise, I can determine who will answer any of the questions. Do we have any questions coming from the floor? I know Corinne had asked about whether, cryptocurrency and blockchain is something that private sector companies are open to engaging with. And I see, Justin did respond to that. But are there any specific responses from the panel? And also just indicate to me if you'd like to ask a question, just so that I can respond.
I can respond quickly to Corinne.
Yeah.
So from the point of view of Celo Foundation, of course, we're looking at how this can scale, right? Because we believe we've found a product market fit, as well as like a clear need where cryptocurrency can help. And after actually the Mercy Corps pilot, we had an opportunity to have a partnership with the UN World Food Program on a similar vein. But this time to demonstrate that aside from using cryptocurrency as the payment rail, it actually opens the doors for our workers to access decentralized finance and all these discussions about savings, credit product, because some of them would use digital microwork and digital work as like a stepping stone to something more, I would say, stable, or at least like a more formal employment, for example, whatever their career path is. And so in this quest to kind of like look for the scaling path, just to answer Corinne's question, there are two things that firms normally ask us about. Number one would be, of course, the legal and taxation framework around cryptocurrency, especially because, and correct me if I'm wrong, like in Kenya, for example, there is a law or a regulation where if you have an employer-employee relationship, then you're supposed to pay the worker in fiat. So that type of discussion has to be clarified, knowing especially that cryptocurrency can unlock more opportunities. The other one is operational, something like, and this is something that is a work in progress, but more of like how would firms book cryptocurrencies, right? Like how would they treat it in the in their accounting? And I think this is very crucial, especially because it's a new asset. And I would say that we continue to work on these issues. We want to clarify it further, work with regulators as well, especially if it will also promote, let's say, consumer protection, as well as like in general, just like education and literacy among those who will work with technology. But our belief is firm that it can really unlock value, especially if we iron out these details.
Great, thank you very much, Angelo. Very well put there. Do we have any other question from the audience?
Yes, I believe there is one question asking whether Visa cards are still available in Africa. That goes to Justin.
That's a good question. I know that there are a number of fintechs with, crypto wallets who are speaking to the likes of Visa and MasterCard. There was one who already has a partnership with MasterCard. I don't recall the name of the wallet. I can look it up now. But I do know that it's a new thing. It's going to happen more increasingly in the African context for African consumers as well. There's a number of people who have those partnerships in progress or are testing it. But let me look up now, and then I'll send in the chat the name of the one company that already has a partnership with MasterCard and can avail those stablecoin cards to African consumers.
Great, thank you, Justin. We can take one last question if there is. There's a question that came in earlier, and the question is, what is the government doing to open up crypto payment options for micro workers? And maybe that's a question I could direct to Ehud. Are there initiatives that the government is doing towards opening up these payment channels for micro workers abroad, or who are sourcing their work abroad?
Thank you, Gituko, for that question. And it's apparently very clear that what the government does is to really put regulations that do protect workers and also promote transparency across the chain. And Shakira has really pointed out very clearly about the developments that are taking place at the policy and regulatory environment. We've seen very progressive policies that seeks to create an environment where there is protection of data and information for everyone, an environment that is really promoting growth of fintech to allow for diverse solutions to be fronted into the country that looks at diverse ways in which we can be able to open up avenues for more seamless and efficient payment systems. The other thing that I really want to bring, that this really is not a Kenya country type of an issue. We see that cross-border transactions, payments, remittances are really a global issue. We talk about African Continental Free Trade Area. We're talking about SMEs, MSMEs, and how the whole payment infrastructure across the globe can really be supported. Let me put it this way, that some of the pilots that are being really implemented at the moment are providing very important and critical data points that allows for policy discussions. And those are the different things that the government is really looking at, given that this is a nascent and a very important sector for us all to really pay attention to, given it speaks to the cost of doing business. And one of the things that we're trying to do is also to ease the aspects of doing business. And so payment transactions and the way the whole ecosystem is unfolding is of critical importance to us as an economy when we look at the easing challenges of working and doing business in the country.
Great, thank you very much, Ehud. And I think we'll close up our question and answer session there. And what I'll do is, as we wrap up, I'll just invite each of the speakers to give us their closing remarks in a very brief way. 1 minute, what are your final remarks with regard to today's topic? And I think we'll start with you, Justin, and then go one by one.
Cool, thanks. I think what I said at the beginning is sort of what I said, or I'll close with. I hope and I believe that a lot of people who are building in this crypto and Web3 ecosystem recognize and know that there's a lot more to build to make this technology more accessible to the quote unquote next billion. And I certainly, believe in the opportunity or the potential, and I'm just excited to see more people build. And like I said before, just more examples and pilots and case studies of, the ways in which, whether crypto as payments rails or just Web3 and decentralized applications as new opportunities for the future of work, can, usher in this potential new paradigm. And so I'm really excited just to see, Mercy Corps and other organizations like Celo as well, just doing a lot more from a pilot and experimentation perspective, because I think that's what it's going to take to see the opportunity realized at scale. So I'm excited for that.
Great, thank you very much. Frida?
So for me, I think as much as we are working around cryptocurrency and payment options, I would really want us to continue with this discussion, especially at the point of making sure that the work is consistent, where the work is coming from, and how that future work looks like. I think that for me, because once the work is there and it's consistent, that it's easier to build solutions, payment solutions and savings solutions. Yeah.
Great, thank you so much, Frida. Angelo?
Yes, this has been a very fruitful discussion, and from the Celo Foundation, we'd love to collaborate more and seek more partnerships with Mercy Corps, with developers and builders, in just thinking about how we could reimagine things, how we could bring opportunities to those who need it the most, and really tackling how we could open, ways to include more people into the technology as we move towards, further digitalization of our world. All the more that we need mechanisms for participation. And we think there is so much potential in cryptocurrency, so much use cases that can be explored aside from payments, track record, portable identities, NFTs, and just like ways to transform and create value where the benefit accrues to those to the creators or to the people. And so we look forward to working with you all and like discovering how we can further synergize.
Great, thank you very much, Angelo. And Shakila.
Yeah, thanks. I think my wrap up would be, I think we need to take an ecosystem approach to this because there are very many people within the system. So as we innovate, as innovators, for example, as we develop the platform, we need to make sure that there's growth also in the other sectors, that we're engaging the regulators and policymakers, we're engaging the users because we need to keep the customers at the center of it. And as Frida mentioned, we're also engaging the supply side, that there's enough supply of work within the platform. And most importantly, that the regulators and policymakers are also being engaged in the conversation to make sure that everyone's interests are protected.
Yeah, my quick reflection is really to say that, of course, we have the building blocks already in place, and I'm glad that as a continent, that good foundation to really spur up what we're already doing. One, I think it's very important to continue adding evidence to this conversation and looking at this from very different dimensions because the African problems are diverse and many. The second one that I think is paramount is really about education and awareness, something that really we need to amplify so that then we can be able to have entry points to policy and advocacy type of discussion that then speaks to regulatory framework that allows us to scale most of these solutions and evidence that we're bringing on the table.
Great, thank you very much, Dr. Ashogo. A big thank you to our panelists and our audience as well for taking the time to have this discussion. I think as we wrap up, I'd like to extend my my gratitude, firstly to the team that worked on this pilot, because I think there's quite some strong evidence and insights that today's session has been built on. And so particularly to thank the Masico Ventures team in partnership with Celo Foundation, Nairobits in Kenya, the Nairobits team, as well as Valora Kosali and Kotanipe. That's the host of the team that was particularly responsible in driving that pilot. And I'd also like to thank the Sunculp team, the organizers of this event, for providing us with a platform to have this very exciting discussion. I believe a majority of us has found it quite informative, insightful, and really fruitful. So a big thank you to Sunculp. And then just to let you know, beyond the discussion today, if you'd like to sort of go deeper into the report and learn more about it, you can download the report. I shared the link earlier. I will share it. We'll share it again, very shortly for you to download. But do feel free, to interact with it a bit more, go deeper into the insights, and learn more about what we found out in much more nuance. And then finally, as we close up, I'd just like to bring your attention to the Job Tech Alliance, which has powered this initiative. It's an initiative of Masico, but more broadly, an initiative of the broader, digital work ecosystem in Kenya, or what we call the Job Tech ecosystem in Kenya. And you can learn more about what's happening at the Job Tech Alliance via the website, jobtechalliance.com. Please take some time to look up there, and you'll get more of this content around the digital economy, around payment solutions on a more ongoing basis. So thank you very much to everyone. And in case you have any questions, I've also shared our email address at Masico. Feel free to reach out and engage with us, and we hope that we can sustain the conversation beyond this. So thank you very much to our panelists, to all the participants, and I wish you a great rest of the day and much more engagement in the coming weeks and months. Thank you very much, everyone, and goodbye.